Hello, I'm Daniel Reeves, and welcome to the Metals Thesis, a channel dedicated to real data-driven analysis of gold, silver, and the forces shaping the metals market. Here we move beyond headlines to examine structure, trends, and the logic behind price movements. If you're looking for grounded insights instead of noise, you're in the right place. Let's start today's analysis by first examining the key developments shaping the current market environment. It's Thursday, the 26th of February. Gold and silver prices are moving lower in early U.S. trading Thursday, with silver once again posting the sharper decline of the two metals. The weakness comes as shorter-term futures traders engage in profit-taking following recent gains that had established new near-term price uptrends in both markets. April gold futures were last down $42.20 at $5,184.40. March silver futures were down $4.878 at $86.245. The pullback follows a period of upward price movement that encouraged traders to secure gains after both contracts pushed into fresh short-term advances. The selling pressure is being described as routine profit-taking rather than a shift in the broader trend. Recent gains had lifted both gold and silver into new near-term uptrends, attracting momentum-based interest. As a result, some traders are now locking in profits, leading to the declines seen in early Thursday trading. Silver is again leading the move to the downside, reflecting a larger percentage drop compared to gold in the current session. While the precious metals markets adjust to this round of selling, global political developments are also drawing attention. The United States and Iran have begun a third round of nuclear negotiations in Geneva, Switzerland. The talks are taking place with only days remaining before President Donald Trump's deadline for reaching an agreement. According to reporting cited by Bloomberg and attributed to the semi-official Iranian Students News Agency, the two countries have been engaged in a tense standoff lasting several months over Iran's atomic activities. The negotiations are being conducted through Oman, which is serving as a mediator. The discussions are being held at Oman's embassy in Geneva. The setting underscores the role of diplomatic intermediaries in facilitating communication between the two governments during this period of heightened tension. Esmail Baghai, spokesman for Iran's Ministry of Foreign Affairs, spoke to Iranian state television on the sidelines of the talks in Switzerland. He stated that Iran has come to the negotiations with what he described as a very reasonable amount of flexibility. He also emphasized that Iran considers itself entitled to use nuclear energy for peaceful purposes, calling it a recognized right. President Trump has given Iran a deadline between March 1 and March 6 to reach a deal. He has also threatened military action if an agreement is not achieved within that time frame. The warning has sparked fears of a potential new conflict in the Middle East. Concerns have been raised that such a conflict could involve Israel and major Gulf Arab oil-producing nations, increasing the stakes of the current diplomatic efforts. At the same time, tensions remain high in Eastern Europe. Russia has launched what has been described as a massive drone and missile attack on Ukraine. The assault occurred just hours after Ukrainian President Volodymyr Zelensky and President Trump discussed possible next steps in peace negotiations. In a post on Telegram, President Zelensky said that dozens of people were injured in the Russian strikes. He noted that the injured included children. The attacks reportedly targeted 8 regions of Ukraine and involved 420 drones and 39 missiles. The scale of the operation marks a significant escalation in aerial activity. President Zelensky stated that energy infrastructure was among the targets. He specifically identified facilities in Kiev, as well as in the Dnipro and Poltava regions. The targeting of energy sites highlights the continued vulnerability of critical infrastructure amid the ongoing conflict. Diplomatic efforts are continuing alongside the military developments. According to the report, top U.S. and Ukrainian negotiators are scheduled to meet in Geneva. The discussions are expected to focus on economic issues. Among the topics to be addressed is a so-called prosperity plan aimed at financing Ukraine's post-war reconstruction. The meeting signals ongoing coordination between Washington and Kiev on both security and economic matters. Beyond geopolitics, financial markets are also reacting to developments in technology and economic outlook. Earlier this week, a blog post from Citrini Research titled "The 2028 Global Intelligence Crisis" contributed to a dip in stock prices. Investors responded as they evaluated the scenario presented in the post. According to a Bloomberg report, the blog outlined a situation in which extremely capable artificial intelligence agents replace vast portions of white-collar employment. The scenario described the possibility of widespread job displacement leading to reduced consumer spending. It further suggested that such a shift could push the global economy into a deflationary spiral. The report indicated that under this scenario, stocks of companies such as Uber and MasterCard could decline. The market reaction to the post is being viewed as another sign that Wall Street is struggling to assess the trajectory of artificial intelligence. Investors are expressing concern that the technology may either fail to generate sufficient profitability or prove too disruptive to economic stability. The report noted that this development falls into the camp of safe haven metals bulls. Uncertainty surrounding economic disruption and financial market volatility often draws attention to precious metals as defensive assets. In the broader outside markets on Thursday, the US dollar index is trading slightly firmer. Crude oil prices are lower, trading around $64.25 per barrel. Meanwhile, the yield on the benchmark 10-year U.S. Treasury note stands at 4.05%. These external market indicators continue to provide context for movements in gold and silver, as currency strength, energy prices, and bond yields can influence investor positioning. From a technical perspective, traders are closely watching key price levels in both metals. April gold futures bulls are targeting a close above solid resistance at $5,400. On the downside, bears are aiming to push prices below solid technical support at $4,854.20. First resistance is identified at this week's high of $5,269.40, followed by $5,300. Initial support is seen at this week's low of $5,109.50, then at $5,100. Wyckoff's market rating for April gold stands at 7.0. For March silver futures, bulls are looking for a close above solid technical resistance at $100 as their next upside objective. Bears are targeting a close below solid support at the February low of $71.815. First resistance is seen at $88, followed by the overnight high of $90.255. Next support is marked at this week's low of $84.56, then at $82.50. Wyckoff's market rating for March silver is 6.5. As trading continues through Thursday's session, attention remains firmly focused on the movement in precious metals following their recent advance into new near-term uptrends. The current decline in both gold and silver is being characterized as profit-taking by shorter-term futures traders rather than a fundamental shift in direction. After establishing fresh upward momentum in recent sessions, both metals attracted buying interest that pushed prices higher. With those gains in place, some market participants are now choosing to secure profits, contributing to the downward pressure seen in early U.S. trading. April gold futures, last reported down $42.20 at $5,184.40, reflect this wave of selling. The contract had recently achieved new near-term price strength, placing it in a technically favorable position before the current pullback. Market participants often monitor such retracements closely to determine whether they represent temporary consolidation or the beginning of a broader reversal. In this case, the description centers on shorter-term traders adjusting positions after recent gains. March silver futures are showing a more pronounced decline, down $4.878 at $86.245. Silver has once again led the movement to the downside compared to gold. This relative weakness follows its stronger percentage gains during the recent advance. As with gold, the selling is being attributed to profit-taking activity following the development of a new near-term uptrend. Beyond the immediate price movement, global geopolitical developments are playing a central role in shaping broader market sentiment. The third round of nuclear negotiations between the United States and Iran is underway in Geneva, Switzerland. The talks come at a critical time as President Donald Trump's deadline for a deal approaches. The time frame provided by the president spans March 1st through March 6th, increasing urgency around the diplomatic discussions. According to reporting carried by Bloomberg and attributed to the semi-official Iranian Students News Agency, the United States and Iran have been engaged in a tense standoff lasting several months. The dispute centers on Iran's atomic activities. The negotiations are being conducted through Oman, which is serving as a mediator between the two sides. Meetings are taking place at Oman's embassy in Geneva, providing a neutral setting for continued dialogue. Esmail Baghai, spokesman for Iran's Ministry of Foreign Affairs, addressed Iranian state television during the talks. He stated that Iran has approached the negotiations with what he described as a very reasonable amount of flexibility. He reiterated that Iran maintains its entitlement to use nuclear energy for peaceful purposes, emphasizing that such a right is recognized. His remarks underscore Iran's stated position as discussions proceed under mounting international attention. President Trump's warning of possible military action if a deal is not reached has added to global concerns. The prospect of military escalation has fueled fears of a new Middle East conflict. Observers have expressed concern that such a conflict could involve Israel and major Gulf Arab oil-producing nations. The implications of any escalation extend beyond regional stability, potentially affecting global energy markets and broader economic conditions. At the same time, developments in Ukraine are intensifying. Russia launched what has been described as a massive drone and missile attack on Ukraine. The strikes took place just hours after Ukrainian President Volodymyr Zelensky and President Trump discussed potential next steps in peace negotiations. The timing of the attack adds another layer of complexity to ongoing diplomatic efforts. President Zelensky reported in a Telegram post that dozens of people were injured in the strikes, including children. According to his statement, the attacks targeted 8 regions across Ukraine. The reported assault involved 420 drones and 39 missiles, marking a significant aerial operation. The scale and coordination of the strikes highlight the continued intensity of the conflict. Energy infrastructure was among the targets identified by President Zelensky. Facilities in Kiev were affected, as well as sites in the Dnipro and Poltava regions. The targeting of energy systems continues to present challenges for Ukraine's civilian population and economic stability. Damage to such infrastructure can have widespread effects on power supply and essential services. Despite the military escalation, diplomatic engagement continues. Top U.S. and Ukrainian negotiators are scheduled to meet in Geneva to discuss economic matters. Among the topics on the agenda is a so-called prosperity plan designed to finance Ukraine's post-war reconstruction. The inclusion of economic discussions alongside security issues reflects ongoing coordination between the two countries. Financial markets are also responding to developments in artificial intelligence and their potential economic consequences. Earlier this week, a blog post by Citrini Research titled "The 2028 Global Intelligence Crisis" triggered a decline in stock prices. Investors reacted as they assessed the scenario presented in the post. According to a Bloomberg report, the blog outlined a situation in which extremely capable artificial intelligence agents replace large portions of white-collar employment. The scenario described a resulting drop in consumer spending and the possibility of a deflationary spiral affecting the global economy. It further suggested that stocks of companies such as Uber and MasterCard could tumble under such conditions. Bloomberg reported that the reaction to the post illustrates the difficulty Wall Street faces in evaluating the trajectory of artificial intelligence. Investors are grappling with concerns that the technology may either fail to deliver sufficient profitability or prove overly disruptive to economic stability. The uncertainty surrounding AI's long-term economic impact continues to influence market behavior. In the context of these developments, safe haven assets such as precious metals remain part of the broader conversation. The report noted that the AI-related concerns fall into the camp of safe haven metals bulls. Periods of uncertainty in equities and economic outlook often coincide with increased attention to gold and silver markets. Outside market indicators are also shaping trading conditions. The US dollar index is trading slightly firmer. A stronger dollar can influence commodity prices, including precious metals, which are typically priced in dollars. Crude oil prices are lower, trading around $64.25 per barrel. Meanwhile, the yield on the benchmark 10-year U.S. Treasury note stands at 4.05%. These interconnected market signals contribute to the overall trading environment for gold and silver futures. Currency movements, energy prices, and bond yields are closely monitored by investors assessing risk and positioning across asset classes. As the session progresses, traders will continue to evaluate how geopolitical developments, economic data, and technical levels interact to shape price direction. As the trading day unfolds, market participants continue to assess the combined impact of geopolitical tensions, economic uncertainty, and technical chart signals on the direction of precious metals. The early session declines in gold and silver are unfolding against a backdrop of heightened global developments. While the immediate catalyst in the metals markets is described as profit-taking from shorter-term futures traders, the broader environment remains complex and closely monitored. April gold futures, last quoted at $5,184.40, down $42.20, are now positioned between clearly defined technical markers. Following recent gains that established a new near-term uptrend, traders are watching to see whether prices stabilize above key support levels or face additional downward pressure. The recent upward movement had strengthened the bullish technical posture of the contract, but the present pullback introduces a period of short-term recalibration. March silver futures down $4.878 at $86.245 continue to show greater volatility relative to gold. Silver's sharper decline reflects its tendency to amplify directional moves within the precious metal sector. After advancing strongly enough to form a new near-term uptrend, silver is now experiencing a round of selling as traders secure gains from that earlier rally. The degree to which support levels hold may help determine the contract's next short-term direction. While traders analyze these price movements, diplomatic activity in Geneva remains a focal point for global markets. The third round of nuclear talks between the United States and Iran is taking place with President Donald Trump's March 1st to March 6th deadline approaching. The limited time frame adds urgency to negotiations that have already followed months of tension between the two nations over Iran's atomic activities. According to reporting cited by Bloomberg and attributed to the semi-official Iranian Students News Agency, discussions are being conducted through Oman, which is acting as a mediator. The meetings are being held at Oman's embassy in Geneva. The use of a mediator underscores the structured format of the negotiations as both sides attempt to bridge differences under increasing international scrutiny. Esmail Baghai, spokesman for Iran's Ministry of Foreign Affairs, reiterated during the talks that Iran has entered the negotiations with what he described as a very reasonable amount of flexibility. He also emphasized that Iran maintains its entitlement to use nuclear energy for peaceful purposes, characterizing it as a recognized right. His comments were delivered to Iranian state television on the sidelines of the discussions. President Trump has made clear that failure to reach a deal within the specified deadline could result in military action. That warning has intensified global concerns about a possible escalation in the Middle East. Fears of a broader conflict have included the possibility that Israel and major Gulf Arab oil-producing nations could become involved. Such developments carry implications not only for regional stability, but also for global energy markets. Simultaneously, the conflict in Ukraine continues to generate significant developments. Russia's large-scale drone and missile attack, involving 420 drones and 39 missiles, has added to the volatility of the situation. President Volodymyr Zelensky reported that dozens of individuals were injured, including children, in strikes that targeted 8 regions of the country. The scale of the assault underscores the ongoing intensity of hostilities. Energy infrastructure was specifically identified among the targets. President Zelensky stated that facilities in Kyiv, as well as in the Dnipro and Poltava regions, were struck. Damage to energy systems remains a critical concern, as such infrastructure plays a central role in maintaining essential services and economic stability. The military developments occurred shortly after President Zelensky and President Trump discussed potential next steps in peace negotiations. The timing of the attack places renewed attention on diplomatic efforts aimed at addressing the conflict. In parallel, top U.S. and Ukrainian negotiators are scheduled to meet in Geneva to focus on economic issues. The discussions are expected to include a so-called prosperity plan intended to finance Ukraine's post-war reconstruction. The inclusion of reconstruction financing in diplomatic talks highlights the dual-track approach combining immediate security concerns with long-term economic planning. The coordination between U.S. and Ukrainian officials continues as both sides address the multifaceted challenges arising from the conflict.